Hello, I'm back. I'm back. I'm back. I'm back. So I'm back, and to be quite honest with you, I haven't taken a trade. Um, to be honest, days like today, my A setup comes rather early, and there was news early as well, so I was kind of hesitant on taking a midnight open, 8:30 or London high trade. And then the only other trades that presented were Bs up until we had a previous day buy at around 1, which I missed. So now I've come back at 2, looking for a 2 o'clock to 3 o'clock macro trade that I may be able to take. And we might not get a trade for today, and that's part of trading. My key issue was and is still I'm getting locked into a bearish bias mentally because I've gotten away with being bearish on bullish days. But on days like today, where there's no specific level to use as a bearish reversal point, it's very dangerous. Trading a short on previous day's high today would have been very dangerous and not resulted in a profit. So being aware and cognizant of which days to trade which bias is very important. Um, for right now, yeah, right now what we're looking at, just give me one moment. I want to make sure I'm logged. Yes, I'm logged in just in case we do see a setup, just in case. But uh, to be quite honest with you, I'm gonna label the setups that occurred so that we can think mentally about how we could have taken them. We'll label them with A's and B's. So A setups are off of levels. So this trade happened at 8 something. Wouldn't have been able, it has to come after 9:30. So 9:30 is right here, right? So now let's look at the trades that we could have gotten after 9:30 that were A's. So we came back to midnight open. That could have been an A. Came back to London high. That could have been an A. We came back to 8:30. That could have been an A. Back to London open, excuse me, midnight open and then London open again. So that's about 5 different A's, 2 if you count both 8:30 touches, right? If you only looked at the lowest level here, then it would have just been 2. And then after that, we got a whole bunch of B's. So the B's are the macros. So I'm going to show you the macros that I'm seeing. So the B macro would have been buying at this high because it retested the macro, right? As well here, retesting the 50% level of this macro. Okay, we've got another one here where we retest the high of that macro. Okay, then later on, price comes below this macro. If you bought this, you may have been able to not be stopped out. 5-point stop would be right about here. So if you did take that trade, you wouldn't have been stopped, and you could have taken it again when we got a little bit closer. So there's multiple Bs within this region as well, and that's what I have to get better on. A trending day offers many B setups and not many A setups, at least not throughout the day. And that's been the hardest adjustment I've been having to make with this model is being comfortable taking the Bs. So then there's another B of a retest of a macro high, right? Then we have retest of macro 50% levels. We have 2 of them. So essentially, there's a lot of reasons to have taken certain trades if we allow ourselves to. If we don't, then we won't. And potentially a B here. Now, since we are opening at 2, I'm expecting liquidity to be ran, so I'm not sure if I would have actually taken this. I actually didn't take it. I don't think it's probable at this moment, but if it does shoot up, technically that is a B trade. I just think since we're opening at 2 and we just had this candle, it's something that I wouldn't be interested at the moment. But as you can see, the B's outnumber the A's. The A's are all the levels. And yes, we had an A trade here at this level, right? When it comes down below it, buying the turtle soup of whatever takes out the level. So there, A in regards to this previous day high, right? So there was opportunity. It wasn't my favorite, but that's just me being transparent about what I'm willing to take and what I'm not willing to take. You have to have discernment. What's up, Rehav Thakur? You have any questions? You have any comments? Hope you're doing well. I'm just going over why I haven't taken any trades for the day. Right? The A's that presented, I missed them just based on timing. I was here, but I was waiting for the 10 o'clock news driver before I took them. So that last retest that happened at 10 was my last chance to get any of those A's. I didn't take them. And then I didn't take the B retest here. I didn't take the B retest here. Didn't take the B retest here. We got above previous day's high, created a low where we could have bought potentially. Didn't take it. And then a whole bunch of B retests that I also did not take. Now this B retest right here, this might actually work. 5 points is actually right there. So this could work as well, but I didn't take it. This is my son. Hello. Say hi. So the purpose of not taking any and every trade is so I could provide for my son. If I took every trade, it wouldn't be a good. I wouldn't be a good steward of risk management. You want to stay here? All right. So you'll stay here with me. But ultimately speaking, the day could be finished as far as my ability to get in a trade, and that would be okay. And then if I do get an opportunity, I will look to take advantage of it when it comes. But for right now, we've got no opportunities. Time to get down. Watch your show. All right. So, any questions? Any comments? Let's see if the B here. You want this? Purple. Let's see if the B plays out, which on a trending day I've noticed. And this is something I'm going to put in my playbook. What's up, Jay Snickets? How you doing? Any questions, comments? I haven't taken any trades today because, like I've illustrated, most of them were Bs, and we did have a few As, but I was waiting for the news to play out before I took any trades. So that resulted in me missing all of the As. The As that happened up here weren't the best, so I skipped those as well. And there was plenty of Bs that I skipped. So what I'm going to be working on is whenever I identify it's a trending day, getting in alignment with the trend to take the B trades. There's a lot of most days are ping pong days where we're swinging back and forth. Yes, ICT concepts. Any level that I have marked is a level that ICT calls a PD array. Every previous day high, low, midnight open, 8:30, London high, low, session high, low, Asian high, low, those are called PD arrays. Also fair value gaps, breakers, order blocks, macro high, low, midpoint. Every single one of those is a PD array, an ICT PD array. So I'm using ICT concepts. The way I'm using them, I'm not looking at just price action. I'm not looking at this range in price and putting a fair value gap here and saying buy the fair value gap. That's not what I'm doing. As you can see, that on this time frame failed. On another time frame, this is just wicks, so that would have worked. But that's not how I'm trading. I do look at different ICT PD arrays. My preferred ones are the levels. So in this scenario, if I traded based on this fair value gap right here, right, opportunity to go in a profit, but also an opportunity if I use this as a stop loss to get stopped, right? So maybe you're using this fair value gap. That's my problem with some of the ICT PD arrays. You can use too many different fair value gaps, breakers, order blocks, and get screwed. The main ones I use, an A trade is levels. So A, right? Midnight open, 8:30, London low, London low. And how I know that these are my levels because I use an indicator that marks up London high. Sorry, it wasn't London low, it was London high. London highs, right? 8:30 level, 8:30 open. That's the true day opening. That's another PD array. Their A is on that. But the reason I didn't take them is because my window starts after 9:30, and if there's news at 10, I sit out until after the news. So after the news hit both these two A entries, three A entries, and I wasn't interested. So then after it took off, right, I didn't end up taking any of the B setups. And B setups are my only other setup I can take. I no longer want to take just price action setups because let's say hypothetically we're looking at this chart and I love taking shorts. If I keep trying to make a short at each inverse fair value gap, at a certain point, I might have went into slight profit, right? 3.5 points, 4 points. It never gave the 5 points I'm looking for, right? So that's problematic, right? So that's how I kind of look at the market. You can look at it however you want. But what I've noticed is levels are more relevant to me than just taking any random PD array. Now there is a fair value gap right here that does align with that B trade, and that's how you want to take the Bs. The Bs, you kind of want to find a price action PD array that aligns with it. So the B off of this level, right? Let's say you're taking this B. You don't see a fair value gap. Why MES over NQ? The volatility is better. So if you're trading MNQ, your minimum risk, let's just say you're risking 20 points. One contract, 20 points is $40. On ES, I know I can use a 5-point stop. And if I'm using one contract, that's $5 times 5 points is $25. So I can learn and I can become a better trader and risk less on MES. I don't want the volatility NQ has. ES has enough volatility. Most traders are blowing their accounts anyway. They don't need NQ. And I can say I don't need to trade NQ because I already traded NQ for over a year and made over 6 figures trading NQ. I now do not need to or want to trade NQ because it is too volatile. The reactions are too expansive. I don't need that or want that. I want a very controlled risk profile so I can plot my trades effectively in backtest and in real world markets. But back to what I was saying. With the Bs, you could use the B with the fair value gap right here. Here, you want to stand in a chair? Bryson's in a chair. Stand in the chair. Sit in the chair. So we got fair value gap, right? With that B trade, and then there's another B here. So you have to find out what other PD array could you have used with this B. You could use a volume imbalance here because of the wicks and the difference in the price levels of them, right? You could have just highlighted this little level here as a volume imbalance and then took the trade based on that. And the only reason you're taking this volume imbalance is because it connects to a macro high, right? Here's another thing you could have used. You could use the top of this up close candle as the order block and the retest of it into the volume imbalance and the B to take the trade because the B is the macro high. Now, as price is going up, we say, okay, let's look for another trade. When price comes down below this B level, you can put a fair value gap here, right? You can say, all right, buy at the consequent encroachment of the fair value gap, the 50% level of it, with a 5-point stop. So you wouldn't have been stopped, and you would have eventually got your 5 points. Now, you would have had drawdown from that initial entry, and that sometimes happens. If you waited until you had a slight market structure shift right here, right? Market structure shift and it came to retest. You can use that same fair value gap with that macro low, or you can add a different fair value gap right here, right? You can take this one away. So fair value gap plus the B level, the B level. Now for the A was the previous day high retest. So to take this trade, you would have to take the retest of it, right? And you don't need a PD array. It can make it stronger. So let's say hypothetically you used this inverse fair value gap right here. You're predicting to buy the inverse bottom of the inverse at the A level for it to go up. Now you could have taken that trade earlier and it not work out. So a key thing when you're taking an A where you're in a deep premium, right? Because we're wanting to buy, but we're in a premium, you need that retest. You need the established right side of the V so you know where your stop will go. But what I mean by that is you already created this low, so that's the right side of the V. If you bought it here, the right side of the V is not actually established. But 5-point stop would you still technically, if you bought it right there, you still wouldn't have, you could have survived without being stopped. But that's the difference between A's and B's. The B's have a macro level, like this line here, 1150 to 1210 macro high, right? Then you could put a volume imbalance here. This is a B. This is not what I want to be taking. I want to be taking mostly A's. This could be volume imbalance here, and it can also be a fair value gap here. So if it's a fair value gap there on top of the B level, you take that trade, right? Okay, here's another B level. We have fair value gap here, and we have B retest here. So you're not going to have this midpoint until this finishes at 140. Once that finishes, we have a B level to use, right? Came back to the B level. So if you had a 5-point stop from here, right? 5 points. Simple as that. Then another B setup that actually gave 5 points. And that's my main problem right now. I do not like taking Bs. And the irony is there's way more B trades on a trending day. I like a day where it reverses. I like a day where it consolidates because that's easy for me to take my A's level to level. Now, when all the levels get interacted with early, I'm limited to just taking B trades. So here's a fair value gap that, normally I would see as an inverse fair value gap because I'm thinking, oh, we breached the highs, we're going to go lower. But guess what? Price stayed at the fair value gap, use it as support with the B macro high to give 5 points. I was very hesitant to even try to take that, and I didn't. But this is the truth. There's A's, there's B's. I have to get better at taking the B trade and not take the C. The C is forcing a sell here. Like fair value gap, maybe this is a breaker, force a sell. No. Where's the A level? None. Where's the B level? None. That's a C trade. I no longer want to take any C trades. Any questions? Someone ask me questions. I can teach. I can talk. Just say something. But I went over A's and B's, right? So we started the day, like I said, after the news release at 10, right here. And because of the news release, I'm not taking anything here because it never got interacted with again. Then all I had left was B's, and I didn't take the B's because I haven't mastered taking B trades yet. I'm very comfortable pressing for A's most days, but then the B trades, I'm very hesitant. So what I do have to work on is taking B trades and being more graceful about it. And a lot of these B's, right? If you look, you could have used the bottom of the macro here, right? That would have been a good B. If I took this B, if I used the midpoint of the macro there, right? And then if I go here to say, all right, here's another macro, could have used the macro, other macro high for a stop, right? And then once it breaks through and retests, could use the macro high still as a stop or the price action low. But let's use the macro low or 5 points, so it's really close to that. Then we take that high, we do another 5 point stop down to this other macro low. So that would have been, protected. And then we come here and we use this level with a 5 point stop to the low. Perfect. So that's what that's what I have to work on. If you guys can master taking B's, you can find trades every day. A's are what I prefer, but B's are also very useful. All you need to take a B is the ICT macro by Lux Algo. Make sure it's turned on to these settings. Go back and pause it to find the settings if you want, but I think what you got to do is turn on and off London Daylight Savings Time and turn on all of these because sometimes they don't come turned on, right? So that is just an explanation on how you can actually be a profitable trader in a sense of like what you can do. I'm gonna screenshot this just to I want to document how many A's and B's I saw and just how I reacted to them. It is kind of sad sometimes when you think about it, just like how many trades you missed or skipped, but that is just how trading goes. You can't catch every trade. So sometimes you just got to be patient and accept that you're not catching every trade. So I just saved that just so I can have that for later. I use kill zones mainly. Yeah, kill zones are good. These are my kill zones: London kill zone, New York kill zone. But at the end of the day, that's when I operate. It doesn't give me a trade direction bias or anything. It just tells me that's when I should be operating. I don't trade London, but I have it on there so I know where the London time frame where it is. But even if we went all the way back to the London, right? Once we pierce this red line, that's previous day's low. So the thought process is, okay, we pierced previous day's low. Let's look to get back bullish to get above it, right? And the only places to confirm that, right, just depending on the time frame you're on. If you're on the 1 minute time frame, you could say that this is a breaker, and once we close above it, we're successfully bullish. Okay, successfully bullish there. You could say that if you don't label that as a breaker, you could label, you could say, oh, this is an order block. Once we close above it, we're bullish. You notice how we didn't retest it, right? Sometimes that happens, right? Even down here, let's say the last down close candle is the order block. So price retested that last down close candle multiple times, took off. And then if you just keep trailing it to other down close candles, all right, let's say that down close candle, retest, took off. All right, say this last down close candle, retest, took off. So there's certain times where the market's trending such a way that you have to just use the order block to even catch it. I typically trade New York AM and bounce for the day instead of trading all day. That's me too. So usually I'm like a 10, 15 minute trader. If you look at most of my videos, my trading actually lasts for 5 to 15 minutes. But sometimes I do stay on the stream longer. And there are times when I've gone degen and I just stay there. But my typical approach is to stay for a short period of time and not get caught up in just watching the market all day. I did leave, I left after like an hour of looking, took care of my son, did other things, went for a walk, came back for 2 p.m. session. So, but for 2 p.m. session, I'm just coming to term mentally with the fact that it's presented me multiple B trades, but I've been unwilling to take them, and that's partially because I have two friends who they won, but they also took some losses today. And when other people around me who I talk to often take losses, and I'm sitting there flat, it makes me really hesitant to trade because what's better than having a losing day is being flat. So I might just stay flat based on the cadence of my trading pod and everything that occurred with them. We're not taking the same trades. We're not even trading the same pairs or assets. It's just that once I see there's a common consensus of people winning, losing, that kind of jades me for the day. So I kind of like try to mind my business. But at this point, I know what they've done for the day, and I don't want to interfere with the probability of it actually being a subpar market. Because most days when we're all winning, we're all winning. The fact that they've both lost indicates a different market condition, and that indicates I need to relax. I subbed and will be checking. Yes, I am trading full time. Appreciate you for subbing. I've been trading full time for over a year now. It's probably been about a. I've been trading full time since last year in May. So 13, 14, 15, 16, 17. This is my 17th month trading full time. Full time. 17th month trading full time. So been trading full time for 17 months. Been trading for over 8 to 9 years. What helped me was getting it with prop firms that allowed me to realize risk management because otherwise I was just over leveraging. So then now with the current skill set, it's just about showing up every day and not over leveraging. That's it. Appreciate you. It can be you too. All you need is a whole bunch of prop firm accounts. I'm assuming you're on this stream. You're not making more than 50 or 100K at your day job. That can easily be accomplished with prop firms without even using your own capital. And then you can create a cushion buffer to then trade full time. But you have to have a rule base. So like the fact that I didn't take any trades today, I actually have to be happy and excited about that, considering that there wasn't that many A trades that occurred in my actual windows because these A trades that kind of occurred happened at lunch hour, which is not really my window. Even yesterday, I kind of almost sat through lunch hour, but I actually got a trade a little bit before that. But anyway, thank you for joining. I'm gonna keep streaming. I'm just any questions, any comments. We're looking at A's, B's. So an A trade is level based. Yeah, so A trade is level based. B trade is macro based. C trade is just price action, right? So C trades are just price action. So those become very dangerous on days like today where you want to sell and you force a sell versus being in alignment with the trend. The trend is going up. Any bias put on a B would have worked. The A's were minimal because we've already touched the A's early on. Now, if we switch over to NQ and take a look at NQ, right? I'm gonna erase everything off of this. Let's see what A's we had on NQ. So A's came down below London high, 8:30 open, midnight open, right? Then B at the macro high, B at this macro low, B at this macro high, B at this macro high, B at this macro midpoint, 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 B, oh, sorry, macro low, and macro midpoint. And then macro high. So in totality, NQ gave 1, 2, 3, 4, 5, 6. You could take this one too because it actually retested it. You just have to look at it. But you see this one. And I assume even if you took this one, your stop, let's see what the stop would have been. If you had it here and you had your stop behind that other price action, if you had a 20-point stop, you wouldn't have been stopped. So we could label that one too, but just hypothetically. All right. We had 1, 2, 3, 3 A's. Some could argue this could be A because it retested it. Right? So let's just say 4 A's, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 Bs. 4 As, 12 Bs. Bless you, Bryson. If you're not looking at your trades in a format of A's and B's, you're already behind. If you think every trade is equal and they could just be labeled as a trade, you're behind. You really have to start learning how to classify A's and B's. That's on NQ. So 4 A's, 14 B's or whatever. I think, yeah, 12 B's. So ES. So now we got 1, 2, 3, 4, 5. It's damn near 6 A's actually, because you could look at the midnight open and the 8:30 retest as individual ones. So let's just say 6 A's, 6 A's, 1 B, 2 B, 3 B, 7 A, 8 A, 4 B, 5 B, 6 B, 8 B, 9 B, 10 B. So the A's, it's damn near 6 to 8 A's, 8 A's, and some of those A's are out of my window. 9 B's so far. So that's something to notate, and just to think about. Mind you, I only trade ES. I don't care what NQ does, but I like to always compare and see if levels were interacted with. So we had a previous day high retest on MES. Did we get that on MNQ? Yes, we did, but it was much earlier in a sense. That happened at 11:10, 11:40. On NQ, I mean on ES, that happened around 1-ish. So very different, but still similar, but very different. So just got to understand A trade is level based, B is macro based, C trade is just price action. Now we want to take price action A and with B. It should be with both of those, but C is just price action. So if you're just taking price action, I would say don't take the trade. If you don't have a higher time frame PURA such as session high, low, previous day high, low, 8:30 open, midnight open, don't take the trade. But we're sitting on the stream, having patience, trying to find out if we can get a setup. I know it looks like there's nothing at risk, but in reality, if I click these buttons, I'm risking hundreds upon thousands to make hundreds upon thousands. So it is definitely a live trading session. I do have a live account. I have many funded accounts. We're showing up to trade A's and B's. That's what we're coming to the stream for. In the future, what can help is putting the limit order on the levels, so there's no room for error. There's only room for the exact execution. But again, you cannot be fearful when it comes to putting these trades on when they're on macros. So what I'm going to do is I'm going to erase everything but this locked. I'm going to lock this and erase everything else because I just want to keep the trades we should be taking, right? And then we're going to wait for another trade to present. Now, if I know what I know, I believe price is going to dip down, right? And then go up to end the day bullish and then have a slight pullback just to create the wick. So I'm going to try to buy it on that last up push. Now the reason there are areas to choose for the up push, there's only going to be 2 areas I'm interested in. So if we measure, there might be 3 areas actually. So if we measure from the low to the current high, right, we'd be looking to get in closer to the 50% level here, which I'm going to label all of them. Well, I'm not even going to label, I'm just going to put a line so I just know. That's one of them. Delete it now, right? If we go back there, it could buy there. Additionally, on this basic push up from previous day's high, price can stop right here, 50%. So buys below this 50% are permitted. Buys below this 50% are permitted, right? And then the last one, because we did the last leg up and we did the bulk of the entirety of let me delete this, sorry. Now, if we start from New York lows up to current price action, we get this level here, which aligns perfectly with one of the macros. So then we remove this. So these are the levels where we may take a trade below the 50%. Was this here? I think this one's an accidental one. These are all these are levels are 50% levels where potentially if this lines up with a macro, which this one does, and this one does. If it lines up with the macro, there may be a potential buy trade there. So we got to see if we're going to get a major retracement for that buy trade. And if we don't, then we don't take the trade. But based on the time, 2:34, if the market's is closing at 4, I'm anticipating within the next 30 minutes, we should have a bearish push down to give us an opportunity to go up. The reason being is price tends to take out equal lows, right? But today we haven't retraced heavily, so we may not retrace heavily. These equal lows right here can be taken out at a 50% level. These equal lows can be taken out and price can go below this, right? And there's more equal lows right here. So that's a possibility right here to buy below that level. This is also previous day's high. So they're going to want to take out all the buyers that happen here. What's up? You want a snack? Say, I want a snack. Let me give my son some snacks. I'm going to be right back. All right, so I'm back. Wow, that is great. Any advice on how to get started? To get started, go look for ICT, right? Start with his OTE. Start with his 2022 mentorship. Start with the 2022 mentorship, no rants. Those are the three things. Until you've watched those, don't even ask. OTE, 2022 mentorship, 2022 mentorship, no rant. Also, you can watch TT Trades. He has a lot of playlists and things to help. So you can watch all of those things. The first thing too, you got to cut your ego. You're going to lose. So when you lose, make sure you're risking the right amount so the loss isn't substantial. That's the key. If you're risking too much, then you can't handle losing. If you can't handle losing, you can't be a trader. So you're going to lose. Just don't make it into a bigger deal than it has to be. It's just part of what's part of trading. Try to be like an adult. If you're behaving like a child, you're not going to like the results you get. If you're gambling, you're not going to like the results you get. But again, I want to be bullish. I'm supposed to take the B trades, right? I'm gonna highlight them. So B's are off the macros. Like I said earlier, do you guys see that? It's right here. It's right here. Let me put this in the chat, and I'll pin this instead of whatever else I pinned. Let me see. Copy. Gotta edit it better. B trades. Whatever. That's how it is. Okay. So A trade is level based. A B trade is macro based. A C trade is price action based. Don't take those. ICT can take those because he says he's just trading price action, but he has levels in mind at all times. So the novice trader needs to learn how to put levels first and then use price action in regards to the levels to actually take a profitable trade. Other than that, it's going to be very hard to succeed because there's days like this where there's price action patterns, but you're not in alignment with the trend, and it's not a ranging day, so you can't fix it. Right? So study OTE, study 2022 mentorship, 2022 mentorship, no rant, TT trades. Those are the top recommendations. Stay away from the egotistical people like Dave Teaches, and stay away from those kind of people. People who they use ICT concepts, but they pretend like they discovered everything and they act holier than thou. Stay away from those people. And they might be good teachers, but I'm telling you, it's not as easy to succeed when someone has a whole bunch of like ego, right? As far as like ICT, he creates so many models where you don't have to have an ego to trade them. But I'm not trying to hate on nobody. I'm just saying lock into people who you you kind of can resonate with them in a sense. Um, I'm not the best teacher for everyone. If you watch my videos, you can learn something, but you need to really lock in on yourself and watch the videos that were already recommended, like they're going to be taken off YouTube. Simple. So today's price action allowed for entries for certain people. If I had followed my trending trading plan, right? I'm usually in my reversal trading plan. So the trending trading plan is take the B trades because Bs happen a lot more. This is not the first day I've documented many Bs on a trending day. Now there are Bs on ranging days too. If we go back to yesterday, right? There was a lot of B trades that could have been taken, right? But they're not as prominent as the A's. The A's are what I'm really looking for most days. Like today, like these days, the A's were at the extremes. The B's would have worked too. Some of the B's would have worked as well. I'm not saying the B's won't work, but the B's are better for when it's trending. Once price started trending up heavily, the only way to catch it up, aside from this A level down here, is this B level here, this B level here. There's some A's here, cool. Then later on in the day, all you have is this B level to catch the last extension up. And look at price shooting up right now. And the only way to have caught that is to have taken that B set up here or here. But the ego can stop you from taking really good trades sometimes. But it's a B. So what you have to do is you have to develop a system where you're taking more risk on the A, less on the B, and then you'll be able to survive. Or if you took an A, you scale in with the B. If you took a trade down here, you scale in here, you scale in here. Well, you can't, it didn't actually go back to this. You scale in here, you scale in here, you scale in under this, you scale in at the top of this, you can scale in at the 50% of this. But the B's, right? The B's are the bread and butter for the trending days. The macro B trades. The A trades, that's bread and butter for me on the consolidation days, the ping pong days, which we tend to have more of those. So does that make sense why the A's, like, you can really get those more, and the B's, you're going to get them less, but on the trending day, you're going to get them more, but you get less trending days anyway. So the system has to be in place to know what your A is and what your B is. If you don't know what your A is, you need to stop trading now and figure that out. If you're always taking C's, just price action, I don't know if you can make it long term, because there's going to be price action that fools you. And the only way to save being fooled by price action is just straight risk management, which is necessary to succeed in any format. But to just strictly succeed with C's, just price action, you have to have great risk management, right? So that's my thesis. We're sitting here through this stream. If we don't get a good interaction, we won't be taking a trade. Now, the macro that may present left, there's the 140 macro already ended. So the last macros we got are going to be the 315 to 345 macro. That might be my last chance to get a trade, potentially. If we come back and retest this macro high, I may take it. If we just pierce it dramatically and go and take to the midpoint, then I'm not taking it. But if we stay stagnant on it for a little bit, I might take it. Technically, I shouldn't, because we haven't taken the 50% of whatever this this is a 50% level, this is a 50, this is a 50. Now that we've went even higher, these have all slightly adjusted in a sense, because again, these are all based on the fib of us stopping at a certain level, right? So if we just measure this push up, that means any buys below this 50, I can take that, right? But that's not going to be in conjunction with the macro. It has to actually be in conjunction with the macro. So then if I look at this big push up from here to here, under 50% is right here on the macro. Cool trade to take to possibly get 5 points. Down here, you got to look at where the fib is starting and ending. So if the fib's starting down here and ending up here, the 50% is right here, which aligns with these macro high and low. So potentially, if it shoots down here, that's a good buy under that red line. And that's why days like this are hard for me, because what happens is I'm looking at the entire range, the entire day's range to have a discount. But what happens is we take the premium and then we're just using small discounts within each little pullback. And if you can't identify that, then these trending days are really hard to trade. And I would rather just sit here talking than taking a whole bunch of bad setups to prove that I can put some risk on. Mind you, I was on stream saying this is bullish. I should be buying it from any B level. And that's what I'm going to get better at. And stream helps me too. So then now, whenever I'm on a stream and I see that it's just trending, look for the B setups. Don't sleep on them. Use the buy stops at the high. Use the limit orders on the midpoint and the low. Simple for buys. Simple. We're in a trending market. Don't overcomplicate it. That's one of my main problems, overcomplicating a simple market. But I did add a good amount of funded accounts to my threshold today. So it is a day where I can just rest and also think. So I need to do some journaling and note taking. I need to rewatch this video. I need to cut it down and realize and identify what I'm noticing. That's why live streaming is important, so you can identify what you're noticing. It doesn't matter what I'm noticing if you don't notice it, right? So what I'm noticing is on trending days, the B setups, anything with these little lines, these are macro levels, right? These B setups present way more on a trending day. On a non-trending day, or at least a day that's not trending majority of the day, the A setups present, right? Throughout the day. But when they only present early in the day, that's a sign that you're in a trending day and that you should be using B setups, right? So in the past, I would have tried to short, and get caught trying to get back to a level. Can't do it. It's not profitable. It only works on a consolidation day, right? So like, look at this. If we go back to here, this is yesterday's price action. If we try to short it at every high, one high, short, fine, it would have worked. Short this high, cool, would have worked. Short this high, cool, it would have worked. Short this high. This is when it didn't work. But guess what? There's no level here to say that it made sense. All these other shorts, it hit a level or a macro to say take me. Once it flipped this level and made this into an A buy, that was it. All you could take after that A buy is now a B buy. midpoint of a macro. That's it. It becomes very simple if you allow it to be. If you look and see that London low, this line here of this green box, because it's between the London times, A's, straight A's, respecting the support level of it. Okay, A's. Then the next trade you could take is B. So B off this macro here, B off this macro, B off this macro, price going up. If you take the A off this, cool. If you don't, B off this. That would have been your trades for the day. Also, this could be considered a B if you look left. If you look left, you can technically use those as Bs. It depends how you want to use it. So it's about knowing how to use the tools you have. But if you want to be an adult about this, you got to manage risk better. You're on the stream because you probably don't manage risk well enough. I'm only able to sit here because I'm not even taking a trade. I'm literally waiting and seeing if there's something that's going to present. Even stuff that presented that I predicted, whether I liked it or not, I didn't take it because guess what? I need to develop as a trader. I still have profitability. I'm still 6 figures up, but it's all about development every day. So my friends today, I explained you need to be using limiters to one of them, and then you need to stop trading so many different trades to the other one. And to myself, my lesson is on a trending day, take the B setups. B setups. On a non-trending day, right? On a non-trending day, only take the A setups. And B can be a scale in, right? So you have to know the difference between the market conditions. Simple as that. And if you miss a trading day, but you're aware and you're present, if you miss it as far as you didn't make money, that's okay. That's part of trading. Sometimes we don't make money. Sometimes we don't. You got to accept that as a reality. It's not always just about always making money every single time you do anything. You got to be an adult about what you're trying to do. Simple. If you're not acting like an adult, this whole thing is kind of pointless in a sense. Can't be emotionally driven. It has to be logic. Logic is consolidation day, we're taking reversals on A's. Trending day, we're taking continuation on B's. That's it. That's it. That's how it should be labeled. Reversals. Okay, so that's if I can just stick to this, I can make 1 million within the next few years. Literally. It's that simple. I've actually showed it multiple times where the days I've blown up or did terrible, it would have been as simple as just taking B setups with the trend, which is super hard. The way to make it easy is this is hard to say, but it's the truth. I have to actually take the A's with more risk so that I'm not afraid to just put one contract on a B. That's the problem. The problem is I'm not taking the A's with enough risk. So when the B comes up, I'm hesitant because it's almost like that trade is equal to the A's I take. That's the problem. The A's need to have a more risk because it's the best setup. The B has to have less risk. I'm so used to using one contract on the master that I'm not accepting that A's actually need 2 contracts on the master and the B's need 1, so that I can scale in without feeling any type of way, and so that I can take all these little micro small trades without feeling any type of way. Technically, I should be able to take a B trade here, scale in again here, scale in again here, scale in again here, scale in again here, scale. I should be able to. The reason I'm not able to, right, is ego. I haven't developed myself yet, and I will develop myself. This stream is my therapy session. That's how I develop myself. That's how I realize when I'm making certain errors and when I'm acting appropriately. Now, Charmaine Trades, I love his stream. He almost gives off like he's fully got everything, and he kind of has it way better understood than me in a sense. Even though I've been trading it, I think a little bit longer, he's just more disciplined. He's the most disciplined trader on YouTube. I'm working towards that. And part of working towards that is figuring out how I can improve by journaling on the actual stream. So in the past it was look for unicorn at 9:30 and blah blah blah, and that's just it. So like a unicorn would have been the last up close candles in this downtrend right here. combined with this this fair value gap right here. And then you would have needed the whole fair value gap because you're only going to take the trade within the breaker anyway. So it would have been take the buys here. So that would have worked. London low, that would have worked. But me not wanting to be involved with news at all kept me out of that position, right? So then if I don't take that, then I have to take the macro trades with price action. So the last down close candle or set of down close, or sorry, the last up close candle in before that short term downtrend here, right? Right? Combine that with this inverse gap here that we didn't even touch but got close to. Combine that with this macro here, take the trade. Stop below this should be protected. Come up to here, retest, take that. Fair value gap here, below this, market structure shift above this level here, retest of that macro level at the A level, take that. It's a B and an A. It's a ba. It's a ab. Right? So B's and A's, A's is trade is level based. B is macro based. C is just price action. This implies that price action trades are also A and B. It's already in A and B. It's built in. Right? Price action is built in. You should be looking for price action signals. But again, on the consolidation days, reversal A setups. On trending days, continuation B setups. That is the logic we have to get under control. How can we catch more continuation B setups? Let me see. Ew. Oh. Okay, so we're getting a slight pullback. Let's see if we get any macros to use to take a trade. It's not just price action, sell it. It's what B macro are we getting that will allow me to get into this trade, right? Because we know based on yesterday, if you know the macro times, because if you click the macro thing, it shows it. We're gonna get a 315 to 345 macro. So we're about 15 minutes from that macro. So last time we had the 315 macro, take note of this. It looks like it's shooting up, comes back to the consequent encroachment. That's the last buy of the day. With 3 candles, you get more movement than most other 3 candle groups. So the potential buy can come at 345 once the macro is finished. So what I'm going to do is I'm going to set an alert or an alarm for 345. I'll put it for 44. So when that happens, I'll know to potentially look for a setup similar to this, because it may be similar, it may not be. If it doesn't look good, I won't take it. I'm just saying. I'm looking for a B setup because there's no A's close by. I'm going to be looking at a B setup based on the macros that will present at that 315 to 345. So I'm going to be sitting here for at least 45 more minutes, most likely without putting on a trade. Now, if you can't do that, you can't be a profitable trader. If you have to get a 10-minute trade every day and you never can sit for an hour or two without taking a trade, you will eventually blow your entire stack. Simple. It's all about building a stack, building up accounts, building a profit, building, wealth, and being patient. It's not actually about quick trades and just doing shit. Now this order block you could have ate off of that. But at the same time, I keep telling you why that wasn't in play for me. The levels, the time, the price action, all of that. But it's still technically that's where the A's were presented today. So then all that was left were B's. Right? A trades are level based, B trades macro based, C trades are just price action. Don't take C trades. Consolidating day, reversal A setups. Trending day, continuation B setups. That's my trading plan. That's the model, right? I'm not very good at these yet. I'm being honest with you. I'm mostly an A trader, right? I'm not very good at the B's yet, right? So even now, it's like if you were just looking at price action, you could say, oh, it's a fair value gap on the 1 minute. Well, what level do you have to support your thesis? If you look left, you have nothing. You have nothing, right? You have nothing. You don't have the macro. You don't have nothing. You can say, oh, I'm trading back to this macro low or macro high. It's like, well, what's going to protect it from not shooting up higher before actually going down? There's no guarantee. This will be straight price action if you took this. Similar to right here. It's like, look, this is just straight price action. Oh, it didn't work out. Oh, it flipped. Now it's bullish here. Same thing that can happen here. Can happen. Talking about probabilities and what can happen. It's 3 o'clock. So maybe this candle now goes down because we're printing a new hourly candle, right? Let the 3 o'clock candle close or the 259 candle close. We're creating the wick on that 3 o'clock. Excuse me. On the created the wick there. Now what we might get is a pullback, so that way that last candle can be bullish with a small wick, or maybe no wick. That's the 1 hour going to 15-minute. All right, on the 15-minute we have a potential fair value gap here. I'm gonna label it because if that aligns with the macro that we're gonna see later, we're gonna use it. It's a 15-minute. 15-minute fair value gap right there. 5-minute. 5-minute order block right here. So we got the 5-minute order block, the 15-minute fair value gap. I labeled it weirdly. Okay, so we've already used this 15-minute fair value gap in a sense. So we might not even use that. But if we do get the reversal, right? And then we can get the continuation B trade, that's what we're looking for. So now that we've created this temporarily equal low, and it could just trend higher, but if this is a temporary equal low, right? This is a temporary equal low, right? We could go that low, we don't have to. See, like this price range right here is already balanced. We had a volume imbalance and a fair value gap that were already volume imbalance plus fair value gap already touched. The volume imbalance and fair value gap here were already touched. We don't have to return down here, right? This 15-minute fair value gap was technically touched. We don't have to return down there. That's what you have to consider sometimes. We don't have to go anywhere. Plus, this is also a little volume imbalance right here too. I don't have volume imbalance labeled. But that's what we're looking at. We're looking at each level. And this is the truth, guys. We don't have what we really want. We don't have a good level. And that's problematic. We don't have a good level. So without the good level, we don't take any trades. It's that simple. Without a good level, we can't take any trades. Now, if you were to have taken that, cool, you could be up 3 points. I measure things in points. I'm not worried about the dollars. The dollars are going to work themselves out. But currently, I'm looking at this level being taken and making sure we don't get below this level. And if we can form our macro within that region, that'll give me a good opportunity to possibly catch buys. Mind you, they will be short term probably, but it's an opportunity, right? And the macro is not even going to start until 3:15. So what I'm gonna do is I'm gonna step away from the chart for about 15 minutes and then come back. I'm gonna go check my son, see if he needs anything. I'll be back. Yep. So we're back. Um, about 7.5 minutes till the macro starts. What I think I'm gonna do is I'm just gonna do some dips. Can you see? Let me turn this light on. 10 little ones real quick. Let's see what happens. Just waiting, guys. We're waiting for a macro to present, and then at 3:45 we may take the trade. But we need the macro to present. All right, so today is a trending day. We're gonna wait for a continuation from a B. Continuation, 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 continuation. We're looking for continuations from the B. Without continuations, we're not taking a trade. A B continuation right here. That, this, 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 this. This is the B trades. This. You see that retest, that wick coming back into the level. That was it. So 1, 2, 3, 4, 5, 6, 7. 7 Bs off of macro levels that were able to be taken today. All right. I'm not even counting the earlier ones that happened like before this because I don't care. I only care about after 9:30. So 7 Bs, and then after 9:30, technically 0 A's here, even though they're A's, but they're not after 9:30. Then up here, 1 or 2 A's because this is previous day's high, right? So even if I did label that as an A, I'll change the color. All right, A, and then an A. So it's really just 2 A's, 7 B's on the day, based on 7:30. So I'm obsessed with selling. So if I just tried selling a whole bunch today, this would have been my only really good opportunity. But I was hesitant based on the news. News coming in at 10, I didn't want to take that trade and get caught in it, right? And then technically, if I was holding this sell and just kept trailing the stop, it would have got me out. The sell would have been overall incorrect. I would have got my 5 points, but if you put the range on there, you see this went above 50% of the range. It went to like 61, 78.6. So I didn't like that. I like it when it respects the 50% level. All right, so here we go. It looks like we may take this equal low here, which is a good sign. We might not, but it doesn't. All that matters to me is the macro presents an opportunity to take a solid B buy. Take that, and then I end the day on that. We're back to the 15-minute fair value gap and that volume imbalance. We should invert that and potentially go lower. Now we've swept that equal low right here. That equal low that's right here been swept. Retest potentially of that equal low to go lower. What levels do we have? None. We have no levels. This would be strictly price action trading. Yes, there is this PD array and such and such and such, but as far as levels, the only levels we have are down here. That's a B level. A level's down here. If we look back left, if we scroll back, what do you see? Even if you said, I'll use this as a macro level, whatever, and I'll use this as a level. We scroll over, those levels are way below us. There's no level currently that is advantageous to taking a trade. Just price action. Doesn't mean it's not a trade, it's just a C trade for me. I'm not taking a C trade. Not today. The only trade I'll be taking today is a B because there's no A level being interacted with currently. So the probability is if I do get a trade, it's going to end up being a B trade. Simple as that. The B is a macro-based trade. Macros down here that were used that I didn't touch. Let's see if within the next 2 minutes, this macro is going to start for 315. If you look at the old macro, let's look at the last 4 macros that started at that time and see what happened. So this 315 macro, after it closed at 345, which is right here, the buy is at the consequent encroachment of the 50% level. Okay, let's go to the previous day's 3 o'clock macro. So this day's 3 o'clock macro, right? The only trade that was available to take, buys from here, sells from here. Didn't do much. How much? 5 points up? No. 3.5 points up. 5 points down? No. So this is the day where the macro didn't come from the 50% level like the other ones. Let's see what the other three macros look like. We want to get a quick case study. So we've seen one where it worked, one where it didn't. Let's look at this one. After 315, price is here. Price then gets close to this level, comes back up here, shorts, then buys from here. If you did put buys from the macro low, you would have gotten 5 points. If you put the buys here with a stop of 5 points, guess what? You wouldn't have been stopped. If you enter slightly above it, you would have been stopped. If you entered here as it retraced back to it, you'd have got 5 points. So that's now 2 out of 3 of the days where it worked. Let's go back again. 315, 345. Right? So the day was overall what? Bearish. Right? So the macro ended. If you took a short from here, targeted 5 points, you would have missed it. You'd either been break even or take a loss. If you try to short from here, you would have missed it. That's 2 days it didn't work, 2 days it did. If you were thinking to be bullish here, that is something you could attempt to do, but we were bearish majority on the day, right? So I'm kind of going in alignment with what the majority of the day's trend is to follow that as a hypothetical. Because again, these are all just hypotheticals. However you react is how you react. I'd rather do this than just take trades that don't make any sense. So 315 and 345. That macro ended. We went lower, got close to the consequent encroachment. Let's say you buy it there anyway, 5 points. Let's say you bought it at the high. Comes very close, but doesn't hit the 5 points. So you have to make a decision whether you're going to take the 4 points or not. That's up to you. You could trail it. But here's a scenario where it kind of worked, kind of didn't, just depending on how you got in. If you got in exactly at the retracement, you wouldn't have got the 5. If you got in down here without it actually touching it, you may have gotten the 5, but you'd have to have just based it on confluence of us rejecting, the volume imbalance, few things. So now we're about 2 for 4, 2 for 5 on that idea working out. In this scenario, price has been shooting up. If you waited till that 345, now this might be more relevant to the day we're currently in, because price has been shooting up and there's a macro right here, which we're currently above a macro right now. And this macro, once it finished, right, did it give 5 points to the upside? It only gave 3. Did it give 5 points to the downside? It gave 9. So this is a potential, right, where we analyze this and say, is this similar to the day that I'm experiencing more than the other days I studied? Yes, it is. On this day, price kept going up and up and up, right, with very little interaction on the A level. So this actually gives a probability of, hey, on this kind of day, we might just be creating the wick to end the day. We might not even be creating any higher high. Let's see if we can find another day that's even similar to that. 315, 345, this day ended up being majority bullish, right? Let's see what happens here. So on this day, majority bullish, if you bought, 5 points. If you sold at the highs, it's still 5 points. Even if you had the tight stop right there, you wouldn't have been stopped. Or if you waited till you simply saw this inverse gap here, you wouldn't have been stopped. You would have been able to catch the shorts. So that's another day where that macro actually just created the wick. And those 2 days were more similar to today because it made straight bullish trend, not much bearish. Now here's a day where it's different. This day, bearish day. Didn't even fully recover the bearish day. 315 comes. If you're trying to be a bull, it worked. If you're trying to be a bear, right? It didn't hit 5, but it hit about 4 points. So give or take, certain days it works, certain days it doesn't. The key is managing your risk and just not settling for less. So currently, the only way I'll put on a position for the rest of the day is if that macro that's opening up right now, right? That macro has to give me a really good reason to enter a trade. Without that, I won't be entering a setup. Let's go on a higher time frame just to look on the 5-minute, 15-minute, 10-minute. So it can be obvious to be like, oh, I would have sold at the high. Well, everyone can say that. You sold at this high, temporary success, fail. 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 Sold at this high, temporary success, and possible failure. Would the temporary success actually equal 5 points? Not even, not yet. You would have had to sold at the exact high. So with conditions like that, it's not favorable. Simply put, just not favorable. Let's see if by 3:45 we get a favorable condition where we can justify some of the decisions that we've made. It's now been about an hour 17 minutes on the stream, no trades taken. Earlier in the day, it was about an hour on that stream, no trades taken. I haven't had a no trade day in maybe like 2 or 3 weeks. 3 weeks ago, there was a day that should have been a no trade day, but I kept forcing trades and had a big loss and had to take off at least 3 or 4 days to mentally accept that that big loss was avoidable. All I had to do was not chase any price action based trades. Don't use the projection to sell off if there's not an aligning confluence. There has to be an alignment of confluence for you to find a reason to just take a price action trade willy nilly, right? So, could argue, oh, this market structure shift here, fair value gap here. You're right. It doesn't mean that you have to put on a position, right? It's in the macro. You should be trading in the macro. I trade when the macro finishes. I trade 345 when it's done. I want to see if I can get a quick bullish push back up in alignment with a bullish day, potentially. Stops going break even aggressively. It's a B setup if it presents. If it doesn't present, I'm not taking it. If you were a short seller at this 50% of this fair value gap, to this point, you've gotten 3.5 points. For me to get my targets, I'd have to get down here to 5 points. It may run that low. That's fine. What levels did I have to give me that entry? None. I had price action. Price action is not enough. Yes, you can find a sell here, but that same premise of fair value gap could have been said here. Someone could have said, "Oh, this is a market structure shift right here," and it would have been the same thought process of, "Oh, it should sell off." Bam, take your stops. Oh, but I'm using a 5 point stop, so it wouldn't have gotten taken. Cool, that's good. I'm happy for you. Every other time that you did this, other than right now, if you've done that in any of these other cells, you would have been stopped out. The only time this would have worked is at this 3 o'clock hour. That's it. Potentially, because we still haven't even hit the 5 point target if you sold, unless you sold at the highest high. But the probability of that for the novice trader, the average trader, is very low. It's about probabilities. Those probabilities are low. So what we do is we remove all the drawings, we wait for this macro to finish printing, right? And then we make a decision based on that. Now, if we're measuring, let's say, this low to this high, right? Potentially this 50% level we can buy below here. This looks like a very powerful candle, which can align with the 61.8, the last up close in this downtrend. Could be an order block. There's a volume imbalance here as well. There's also an equal low right here. All reasons we can target this level, right? Now, if we come down and then the macro low is around here, I can buy with more confidence because we're in a discount relative to this range, right? We have this order block to possibly hold price up, right? And we have the macro. If that happens, we're buying down here, hypothetically, we don't have to take the high to get the 5 points. We can get right back to here and get the 5 points. And if the stop is down here, 5 to 5, if we run this low, if we ran this low, that buy trade is dead anyway. If we run this low, the buy trade is dead anyway. So this is a potential trade if the macro will close within the next 20 minutes, give us a low or consequent encroachment close to this area. That could be an alignment for an actual trade. Now it can come all the way down to this macro high. Now if it comes down to the macro high, right, we can reanalyze and think again. We can look at it such as we can look at the fib level from being here to here and saying, okay, see how the 50% barely changed? It barely changed. So even if we're using that entire range and we're coming all the way down to here, and we're not basing a trade until we at least touch between halfway between 618 and 75, we can still get the 5 points. We might not get the trade though. That's the hard part about trading. You might not get the trade. It might be a no trade day, which is fine. There's a lot of things going on. People around me are losing. I've added hell of accounts today, so it might be an opportunity to not trade. But these are all possibilities, potential. You have to be ready for the potential. Let's see what happens with the macro. Let's see what happens with the fib levels. So we're only going to be looking for possible buys below the 0.5 level with macro support. That's it. And we're going to go break even aggressively because we're just trying to protect the capital. We're not here to make a killing. We're just trying to see if we can catch that one last trade for the day. And if we can't, we can't. If we can, we can, and then we do. But otherwise, we'll say, okay, no trade day. The worst thing is I spent 2 to 4 hours on the chart, maybe 3, but at the same time, I didn't lose money. So I don't have to feel bad about it. It's just certain days, it's your day. I had to take today to learn, okay, if it's trending, look for the B opportunities once we've confirmed we're trending. Stop thinking about the A opportunities. The A opportunities are going to be within the wicks. The B opportunities are part of the continuation, a part of price trending. It's all listed here. A is trade levels. A trade is level based. B trade is macro based. C trade is just price action. Don't take. Consolidating day is a reversal A setup. Trending day is continuation B's. Waiting to catch B off 315, 345 macro. Key information. Key information in the pursuit of greatness. That's the trading plan. So we're following that to a T. We're not going to deviate from that plan. Any questions, concerns, shit talkers, anything? About four of y'all, so if y'all want to comment, you can. Don't you don't have to. But um, that's really it, guys. I'm just waiting for this. We got 15 more minutes till that macro closes. So far, this is the dealing range we have, right? Some days we just don't catch a setup. It's that simple. Some days we do not catch a setup. I don't know if that sounds retarded or doesn't make sense to some of you guys, but some days there's no setup to catch. If you don't catch it early, there's no setup to catch, right? So we accept that as a reality. We don't try to press upon each day to squeeze. We accept the reality of the situation. There's days where you don't take a trade. There's days where you watch a market for a good amount of time without taking a trade. If I didn't come back PM session, I would have been fine. I could have been doing other things. But I wanted to come study the price action and gain some clarity. And I feel like I actually gained some clarity as far as how I'm going to be operating in a trending market condition, which I essentially, in my mind, I only feared them prior. I never thought, how should I be operating during this market condition, right? And now my brain is saying, listen, you know it's when it's trending, there's only one type of trade you can be looking for when the macro levels are gone. I mean, when the major levels are not being used. That's a macro trade. Simple as that. It has to be a macro. Macro, macro, macro. Simple. That's just one of the concepts I labeled B setups for. That gives me a chance when the levels aren't being used on a trending day on what to do. So I have to accept that and have that ready for the game plan. Got 14 more minutes. Yes, we have price action within the macro. But again, I need the macro level. I need the macro high, low, midpoint. I need it to be closed. That's how I trade it. I don't trade within it. It does work for people, but that's not how I use it. I use it a certain type of way. So it's all about the user, human that is operating the trading system. So far, we're on here about an hour 30. No setup taken. Am I disappointed? Hmm, not really. I kind of expected that I was going to be hesitant. And I know the reason why now. There's no A, so I'm not comfortable. And then the B, I'm uncomfortable with the B's. And that's just a mental thing. I have to overcome that mental obstacle. But it's knowing how to grow from that. It's not staying caught up in I didn't catch a trade, so I'm sad. No, bro. There's certain levels you have to use, certain levels you're not going to use. We're not going to use any random non-established level. And then for the B levels, we have to use them when they present. So when the B presented and I didn't use it, I failed my system at that point. And then I take note of that. How did you fail your system today? I didn't use it when it had a B support level. I didn't use it when it had a B support. B support. B support. Right? The B support. The B support. I didn't use it. B support. So we had multiple B supports that I didn't use to catch these buys. Right? You see how the macro level changes as we get higher? It may look like it's an obvious trade after the fact, but during the actual trade, there's not an established consequent encroachment yet. It's not an established 50% level yet. If price shoots up dramatically, it's going to keep pushing the 50% level. That's something to consider when trading macros. Because it's easy to be like, why didn't he take this and why did he take the only time it's actually concrete levels when the market when that macro is closed. Otherwise, you're looking within the macro to take a price action pattern. So if you're doing a price action pattern, you can be like, all right, this is a market structure shift. No fair value gap retest. Okay. This is a order block. Okay, order block retest. Cool, take that. My hat? Thank you. Thank you, Bryson. You brought my hat. Someone brought my hat from you. Thank you, hat. Hat, 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 hat. Put your hat on. Where's your hat? You're gonna get in a chair? Chair. Bryson's in a chair. Let's see. 5 people watching. Yeah, bro. Like I said, we got 10 minutes till the macro closes. At that point, I can make a decision about the last trade that I'll possibly take, if I take any. But until then, we're just watching it. And this is just a study day learning, seeing why and why not to do anything. The key is, I'm going to keep saying it because it's for me. It's not for y'all. I don't care. The A days are consolidation days primarily. You take the reversals. The B, sorry, not A days, the A trades. The consolidation ping pong days are usually A trade days. The trending days are B trade days where you just trade the macros in continuation. And then the C trade is just price action, which we're not supposed to take. If I'm just taking price action, that's a sign that I'm just chasing price. That's how I look at it from now on. If I just see a fair value gap and I say, all right, I'm finna sell it, I'm chasing price. That's how my brain works now. I don't just take fair value gaps. I don't just take stuff. It has to be at a level to give me the confluence to say, all right, we're at midnight open with this gap. Cool. But I would already looked at midnight open and been like, cool. I'm not gonna sit there and overanalyze it. Like this fair value gap here is only relevant because we had the macro that we touched. The macro is what's important. The levels are important. So if you scroll down, we got this big fair value gap. But the only relevant place to get in it is near these levels because that gives the best opportunity for risk reward. Even with a 5 point stop, you'd have barely been stopped on that second one. First one, if you entered right there, you'd have been stopped. If you used London High, you wouldn't have been stopped on either. And the fair value gap's not in London High. But another time frame, that's just a wick through the fair value gap. It's not invalidated. So not that fair value gaps don't work. It's just you have to look at them in a certain way at a certain level. And until you understand that, you shouldn't use them. You need to study them more and study which ones do what. Right? Like that's the key about trading. You got to study, study, study. Look at certain conditions, figure out why or why not. Even today, like I don't really like how this macro is forming. I don't like it. But we got 7 more minutes to get a different variation of it to possibly trade. But I'm not really impressed with how this macro looks. But 6 figure trader, right? Full time 6 figure. I should put that in the thing so y'all can actually just know that. So that niggas don't. I mean, people don't ask or say anything. So let me see. Uh, okay, put full full time trader. Um, green. Okay, okay. We make it smaller. Full time trader. So y'all know what time it is. It's 5 more minutes. We got 5 more minutes for the potential macro to close and then give us an opportunity potentially. So far, erase everything again because it doesn't really need to be on the chart. So far, you got the macro high, potential high, macro high and low. So this is the high, put that as a black line. This is the low, and then this is the 50% level, which we can make into a dotted line. That's the current macro. Now I'll adjust it as the macro adjusts, but potentially, right? If we really think it's going to be bullish, when the macro closes, we should buy from here and target 5 points. If we really think it's going to be bullish, but it's going to have a deep retracement, then we should buy at the low and target for 5 points. Right? If we think it's going to be bearish, which two of those examples of super bullish days gave bearish retracements. I remember two of them specifically. So then that means we would sell at this macro high here, this midpoint here, or this low. All of those could be potential trades that could be taken. And then if you combine that with the price action that presents, you have a clear picture as far as what's possible. So we're just going to have to wait to see if we get any of those opportunities after that 5-minute close in 5 minutes, after the 5-minute closure. It's not easy, but you got to think about the market in these kind of terms. Like, I already know what I potentially might do worth 5-point risk in a sense. Because either we're creating the wick for the day, right? Which we've already maybe set the high end for the wick, or we're going to push up to then create the wick for the day. And we might close just as a straight bullish candle considering this is the first day of the quarter, right? This 50% level, you could say, oh, it's already been used. The macro didn't close yet, right? The lines I put extended out, but the macro hasn't closed yet. So we have to wait until we get a closure within 4 minutes, 3.5 minutes, to then make a real analysis on what's going on. Let's see what we get. It's 4 o'clock right now. Bryson, where's Daddy's big hat? Where's my big hat? It's a little hat. I want the big one. I have a Discord, but I don't even know. Like, people don't listen anyway, so I don't even know what the purpose of the Discord is. Like, contact me on YouTube, TikTok. I can send you the Discord link. It should be in my bio. My problem is that people join Discords and don't commit, so it doesn't even matter. Like, I don't charge anybody, so they don't take it serious. I just focus on making money. That's the problem. People, they want to get in a free Discord. They get in, don't use any of the information, complain until they pay for someone else's Discord. Then they don't use none of that information either because they don't value the dollar that they spent because all the Discords and shit is too cheap. If you spend $100 for Discord, you're not going to value it. If you spend $500, depending on how much money you make, you're not going to value it. And that's problematic because that's all you actually need. Free, 100, 500. If someone's charging more than 500 for any kind of service, it might be worth it. But if you can't appreciate a $100 or $500 service, then the $6,000 service is not going to do anything either. I'd like to chat with you and watch live and collaborate. I don't. We can watch, collaborate. I'm not really good at collaborating with people. I'm very independent thinker minded. But I would love to discuss and talk. And you have my email, bruceprofits@gmail.com. Here, Bruce Profits. And I'd love to talk. I could talk with you, but if you don't have any level of success, you haven't passed a funded account, you didn't get over you didn't get over 10,000 in payouts. I really can't say that the collaboration is going to be even. I'm willing to add value, but I'm not trying to get on the phone with people to tell me that they know a better model or entry or whatever, because my results speak for themselves. But I do like speaking to new people, so we can always talk. You have my email. You can contact me YouTube, TikTok, um, and maybe that'll be a good friendship or a good studentship. Or oh, here comes the alarm. So we're gonna get the closure at 3:45 soon here, and then that'll give us an idea of what we're gonna be allowed to do. But it's no shade. It's just understanding that no, and nothing's wrong with saying collaborate. That's a normal thing to say. I don't want to waste anyone's time by explaining like we're not going to be working together as much as like I'm going to find out what you're doing wrong and I'm going to hold you accountable to getting better. And either you're going to stop talking to me because you're annoyed or you're going to keep talking to me and I'm going to keep annoying you until you get better. And if you don't want like that, then it won't work because I'm just gonna be on your head about this. I need to. That's all it is. Fine tuning. You're probably just over leveraging or taking too many trades. That's usually all it takes to become profitable. You got to stop over leveraging and stop taking as many trades. So let's see what happens here. So 345 hit, or it's about to hit technically. Let me just see. I'm gonna remove the lines. So 345 hit. We're at the macro low. Could buy it if it goes below it slightly. All right, we're at the macro low. Should we buy it? Probably should buy it. Buy the
Order
market.
submit. Order filled.
Buy market. Buy market. So we just bought based on the macro low. The stop is for 25 points. I forgot to turn on this copy trader. Dang it. I need to close this. Buy again. Okay, bet. So now we have the buys in at the macro low, and we're trying to get 5 points, which is not even the macro high. Let's see if we get it. Once we get up to 3 points, I'm gonna break even.
Order
If
submitted.
we shoot up here, I'll enter one more contract. The reason for buying, we're at the macro low. We're looking to get at least back to the 50% level. And we might close there depending on how price action is looking. Let's see what we get. Which should see us go at least to the 50% level of the macro.
Order filled.
Okay, we got entered into a second order. Oh, dang, my apexes did not copy trade it. Well, so that means I'm not taking a trade on those accounts, which is okay. Because it's too late now. So we'll accept that it's too late. We're going to go break even on the ones we do have the trade on. We're not going to get mad about it. We're just going to accept the reality. We don't have a trade on there. There's nothing we could do. We're going to tighten this stop to the low. We can't tighten the stop to the low right now, but yeah, we just moved the stop to the low. I'm kind of mad about the apexes not being in there, so I might just close this prematurely right now because we're at the 50% level and we're not closing above it. So I think I'm just going to close this.
Order
I
filled.
just closed it. It may shoot up, but I'm a little bit upset that we weren't in the apex accounts like I wanted. So I'm just gonna call it a day there. Yeah, it's about calling it a day right now. We're not doing any other trades. We're calling it a day. We're green. We're green on the day. Small green because the trades we took, they went in profit, but the ones that we didn't take, I'm kind of upset about them. So I don't want to I didn't want to hold the position anymore because I'm upset I wasn't in the full position. But if you saw here, what I said is playing out. Macro low, right, to the macro high for 5 points. I closed super prematurely, and it's not good, but I did it because of the trading error I made by not having the other accounts copying, and I felt my energy off just because I'm mad that those weren't in the trade. So I didn't want to sit here trying to pretend to manage a trade with just a few positions on and being mentally upset and mad. So that's what happened. And sometimes that's how it goes. Sometimes things don't always work out fully, so you just gotta let it be. Right? So we took the buys, they were decent. We closed them prematurely. If we go on a 30-second chart just to look how it looks, buys at the low, added to it, price shot up, we closed prematurely. That's the zen I need. Yeah, bro, that's all you need. Just some zen to know whether to do what and what. See how we're struggling at the 50% level? It kind of alarms me. We may still shoot up. I closed prematurely, but it was for this. Look, see how fast we hit that limit order? We hit it fast. We would have hit it. But I'm about capital preservation. So the 5 point limit order would have been hit. What times do you trade? I trade between 9:30 to about 11:30, and then I come back between 2 to 4. Typically, I don't take any trades in PM between 2 to 4, but today I couldn't get anything early, so I came back. This trade would have gave the full 5 points if I held to the limit order. I didn't hold to the limit order, and that's the results. Small profitable day. It wasn't the best day, so I survived a day that wasn't the best. I'm fine with that. My projection was correct, but what I said was relevant. Look at how we're reacting to the 50% of this level. That's telling us everything we need to know. Yes, price can shoot up. It literally hit the limit and reversed. That's a sign, right? Because this is 30-second, you can't see. It hit the macro high to reverse. So now there may be a continuation sell with the macro 50%, or it could actually still just close above the 50% and go up. But I'm no longer putting any risk on the table, so I don't care. And also, there was trading errors on my part where my other accounts weren't entered in the trade, so that made me not interested in taking any trades or holding the trade per se, because I had a trading error. So it's like a whole day of waiting to do that. Yeah, it wasn't really worth it. But again, what I was trying to teach about today is you should be looking for B trades on a trending day, macro based trades. So buying the low of the macro, bam, could have got 5 points from the macro low, right? Could have gotten 5 points. The reason I didn't hold the limit order there. I closed it prematurely. Additionally, one account they were having errors. I'm not here to sit here and find out about the errors. I'm gonna just turn it off and move on. Just take out the trade and move on. But the times is 9:30 to 11:30 and 2 to 4. But I'm fine. I'm fine with that execution that occurred because what I said on the stream was it's low probability. It can happen, but there is a swift nature to it. So as soon as it hit that macro high, it reversed. Now it's showing that it's going to go bearish, right? Like I said, how those other 2 days where it went bearish when it was overall bullish to create the wick, right? The potential was there to catch quick buys, quick sells, quick. But that wasn't my game plan. Bryson, what are you doing all this paper out? You can't have all the paper. No, you can't have all this. You can only have a few. Trying to get all the paper everywhere? No. My son trying to play with all the paper. But green day, slight green day on across most accounts. A lot of accounts didn't really get any interaction. That's okay. We'll be back tomorrow. Gonna end the stream here. 3 people watching. If you have any questions, send them right now. Let me answer them. But I'm gonna end the stream. If you want to reach out to me, bruceprofits@gmail.com. If you think you're better than me, I'm happy for you. It's just about discipline and managing risk. I don't care about nothing else. All the other super profitability comes from just managing risk. Other people get confused. I don't. Use your crayon. Where's your crayon? Look, where's your black crayon? You got enough paper. You don't need no more paper. No more. You already have paper. You don't need no more paper. Bro, you have paper. Relax. No, Bryson. No. Here, you got 1, 2, 3. That's it. Here, take this one actually. You get 3. It was a good lesson. It was a good lesson in terms of expectation, right? It was a good lesson in terms of expectation and behavior. So I expected a quick 5 point push. If I reacted slightly faster, I may have had a better entry. So the fill would have been better and the exit would have been better. But no matter what, you have to understand it's about managing your actual capital. Every day we go into these markets, we put everything at risk. Our butt is on the line. Thank you for emailing me. But if you don't manage the risk, it's pointless, right? So I had a thesis. I realized very late in the day how I should be, treating the day, and that's what I did. I didn't have to lose a whole bunch of money to figure that out. I just looked at my potential trade ideas not working out without plotting them on the actual money losing screen, and then adjusted mentally. And I documented it now. Those days where it's trending heavily, right? You can guess that last macro is going to actually give you the wick. What risk do you aim for? It all depends on the account size. Prop firms, the max I'm trying to risk is 5 to 10% per trade. So you have a $2,000 balance, right? On a 50K account. The max risk should be $100 to $200. That's it. If you're doing more than that, you're gambling. I hate to say that. Because what I've noticed is people who typically do more than that, they won't let their losses end in just a few hundred. It becomes a few thousand. So you have to develop yourself to become actually capable of even taking a regular sized loss. So risk on a huge account, if we're saying you have a 50K account, which it's not, right? If it was a 50K account, if you're risking 1%, that'll be $500. That's 25% of your drawdown of the account. That doesn't make any sense. So then if you don't use 1%, right? Let's say you use half a percent, that's 250. So 250 is over 10%. That's damn near 15% per trade. I'm sorry, that's too much. Okay, break that in half. The ICC said the max should be about 7.5. So that's about 125 per trade. That should be your max. Those who can, do better than that, they're very skilled. You have to be very skilled. It's all Apex? No. It's not just Apex. It's a lot of different companies. A lot of them. I don't even need to name them because I don't even want them to come looking at my stream and whatever. It's just a lot of companies. Any company you've heard of that's legitimate, I probably have accounts from them. But at the same time, I don't have some of the regular ones. Like I don't have Top Step right now. I don't have There's some ones I don't have which I gotta go get. But it's not just about Apex. Apex is good, but since my Apexes weren't activated, that pissed me off. And that made me just say, screw this trade. I'll just end it here at profitable 1.2 points. Whatever the point, it was about 1 or 2 points I got, right? Um, Sometimes that's what happens, right? The trade went to target, but I closed super prematurely. If you look here, I closed on this candle between where price went. I closed here. Price went a whole extra 2.5 points up. So with spread and commission alone, barely made any profit on that, right? Made about 1.25 point, 1.5 point, and that's okay, right? And that's for this scenario. Other scenarios, a lot of times it's perfect. This scenario, if I had just held it, I would have got my 5. I didn't hold it, didn't get my 5. If I entered here, you wouldn't got the 5 there. You'd have to enter here to get the 5. But see how fast it whipsawed it? So no matter what, if I didn't have my limit order here, I would have been here below where I exited looking to close it. So no matter what, I made a very good decision. The decision making process is what matters, making very good decisions. I recommend Top Step and use the limiters. Use the limiters. So limiters, profit limiter, loss limiter, time limiter, contract size limiter, the asset limiter. Like if you're gonna trade MES, make sure you lock out of NQ so you don't get frisky and try to go on MNQ. You should be trading one asset. I recommend MES. You should be trading one prop to begin with. I recommend Top Step. Even though I'm not using them right now, the beginners, if you're asking what firm, you're not ready for Apex. Straight up. If you're asking, you need Top Step. You don't have what it takes yet. I made it work with Apex from the very beginning. You know what I'm saying? But what happened was I traded Forex firms for years, so I knew how to work one account before I touched 20 accounts plus. Right now I'm managing plus 35, maybe 50 accounts. It just depends on what you're looking at. So you have to realize that you're not cut like everybody else until you actually earn it. You need to earn it. Don't waste your money trying to prove that you should be somewhere without earning it. You need to earn your right to trade with lots of firms and to trade big capital. But yeah, bro, we're gonna talk Jay Snickets. I'm gonna find out who you really are, your name and stuff. We'll talk. I don't really even have much people who even care about what I talk about. Doesn't matter. I still make a whole bunch of money, so I can give you some value and you can figure it out. Um, Tradeovate. Tradeovate's okay. If you're gonna trade off Tradeovate, you might as well just trade off TradingView and just hook it up. But I have multiple setups. I got quant. I don't even show it on the stream. You just see this on the stream. Other than that, I got Quant Tower. I got Ninja Trader with Replicanto as the copy trader. Look at the bearishness. So this goes back to the thesis I had about those days that are super bullish, ending with the wick being created, and that's what happened. That quick whipsaw above the macro high, wick created, and then now we're just trending lower, meaning we could have sold off the 50% level, right? This 50% level could have been used as a selling point, right? But I was so busy talking and not really interested anymore, it didn't matter. But that level, right, could have been used as a selling point, and we got to document that. A B day, right, or a B trade off of this macro. We failed to stay above this. Okay, then we enter on the retracement of this. How do I find you again? BruceProfits at gmail.com. Bruce Profits on TikTok. Bruce Profits on YouTube. Bruce Profits on. I don't have Instagram right now, so you don't need to find me there. But this bearish thesis that I didn't follow but knew about, it's key to understanding the different type of days. We had a majority bullish day. Finally, bearish retracement to end the day, right? I was still interested in bulls because I found support at the macro low. If I had left my limit, could have been good. But if it missed, I would have closed pretty much the same place I closed or worse, right? I didn't actually go break even because I realized let me just close this position out, which would have worked. It worked out anyway because that whipsaw, I would have had to have the limit perfect. Then the sell trade came in, like I said, at the macro 50% level. Got you. Thanks. Bet. We're going to be on it. Everybody can get sharper at this free of charge. You just got to contact me. We'll talk. We'll create a game plan. If you don't follow the game plan, I'm going to leave you alone. That's it. The game plan is simple based on whatever your strategy is. Once we find out what your type A setup is, type B, I don't want to hear about a C setup. And if you're taking only C's, I can't help you. If you're taking just price action, I just trade price action. You're going to get fucked. Oh, excuse me. It's not. Sorry, I didn't mean you get fucked, but you know what I'm saying? 10-4, God bless. I appreciate you insights. You and Bryson. Bryson, have a blessed day. Thank you. Appreciate it. I'll be back. I'll be back tomorrow, 9:30 sharp. Maybe a little bit later than that. But we're gonna hop off the stream for now. It was a good stream. I appreciate the feedback. We're gonna grow, and we all just gotta hold each other accountable. Now, if you two are serious for the emails, I'll get you added in a group, and we'll actually work. If you're not serious, you'll find another stream and talk to somebody else, which is fine too. I just want everyone to succeed, but it takes risk management and being very deliberate about what you're doing, not getting too caught up emotionally in anything. That's enough.